Time now for the markets with Leighton, and you say that cotton is still seeking a direction.
Been kind of stuck in that market, Artist. We'll have some marketing advice actually for cotton producers in a moment. Also had this first week of December, rice prices appear to have made a bottom. Corn trade continues in a sideways pattern. And at least one analyst says the big chicken companies stand to benefit from strong retail demand in 2013. Fewer cotton acres are anticipated in the U.S. in 2013 as higher prices for corn and soybeans pull acreage away. During a break at this week's row crop short course at Mississippi State, Chicago analyst Mark Gold offered some marketing advice for cotton. He says the risk is probably more to the upside.
The cotton had their move 2 years ago, and we went to record prices. That brought the new crop cotton prices up to 110, 120 in that level, which was a great marketing opportunity. Now that we're back at 70, 72 cents, it's becoming more difficult. What I would say is that the risk is probably more to the upside, whereas if you have sold cotton at these prices, I would look to buy a call option to replace it in case we do move higher. On the downside, we could still grow a big cotton crop. If we get the weather, cotton could still be a 50-cent or 40-cent item. I'd still buy a put option, spend 3 or 4 cents to try to protect the downside.
Looking at the rice market, there has been a steady upward movement in price there for over 2 weeks. Many analysts are optimistic and seem to believe the fundamentals will not allow prices to fall very far. There is a confidence building in the market that rice values will be pushed to higher levels. Traders do say futures prices appear to have made a bottom back in mid-November. Analysts also note that rice mills appear to be scheduled to operate full-time into the first of the year. Turning to corn now, DTN reports through AgFacts that overall this trade acts as if it wants to stay sideways in the near term. Information about ethanol from corn released this week indicates that production is expected to remain near recent levels, but a step below the expected pace. Now, for many corn analysts like Don Rose, the focus continues to be on the continuing drought situation in many areas of the country. He notes that 60% of the U.S. Corn Belt is still listed in a dry drought situation.
If we don't get moisture, the market has a chance to move up, and we know it can go to at least $8.50 now because we did last year. At the other side of it, we have a chance to drop under $5 a bushel, I think, pretty easily if we end up with some trend line yields or more if we're going to get this 97 million acres. So what I would say, a window contract, you can buy 640 December corn puts, sell the 740 calls and sell puts below them $1, give yourself a $2 range up or down and spend about 10, 15 cents.
When planting season approaches again, one threat to the stability of retail fertilizer prices could be the navigation troubles on the Mississippi River. A spokesperson for the Fertilizer Institute this week said that continuing low water levels in places threaten to slow or even stop barge movements of fertilizer. DTN reports about half of the fertilizer applied in the spring in the United States moves up the Mississippi River by barge. Officials say alternate transportation methods will not be able to pick up the slack without there being some supply problems and likely higher fertilizer prices. Well, speaking of fertilizer, a well-known regional ag supplier based in Mississippi has acquired a Louisiana firm. Jimmy Sanders Incorporated of Cleveland has acquired G&H Seed Company and its related operation, Lick Quick Fertilizer, both of Crowley, Louisiana. The Louisiana company is over 40 years old and family operated. It services clients in Texas, Arkansas, Missouri, and Louisiana. Jimmy Sanders itself was acquired about 6 months ago by Pinnacle Ag Holdings. Our trivia quiz for this week deals with forestry. Let's give you the question. What's the standard height for measuring a tree's diameter? The answer is one of these: at ground level, or 2 feet above the ground, or 4 1/2 feet above the ground, or 6 feet above the ground. You'll find out in a few more minutes. The government's most recent cold storage report shows that the total red meat supply year over year has increased in the United States. Analyst Virgil Robinson says that's no surprise. However, as other traders have noted here in recent weeks, he says the situation will be flip-flopping in the cattle sector and there will be a shortage of beef supplies. For now, though, there's plenty of pork as well as beef out there.
We've had a flush of pork driven by a pretty serious sow slaughter. Now, in each of the last 2 or 3 weeks, that's been slowing down. So I think that flush of pork has hit the marketplace. I expect that to slow down over the course of the next several weeks. In addition to that, we have a major supply shortage looming in the cattle market, both the availability of replacement cattle as well as the availability of cattle on feed. So, consumer, prepare yourself. Now, one of the headwinds that we need to also mention here in our discussion about red meat and price prospects, which I am bullish on, is the fact that Japan, one of our major importers, is experiencing a pretty serious recession. And that's likely to continue moving forward. So please understand, they are a big beef and pork importer. That's a headwind we need to acknowledge.
And we close on a poultry note. Sanderson Farms, Tyson Foods, and Pilgrim's Pride all stand to benefit from stronger retail demand for chicken. Analysts for Stevens Incorporated say this will happen even as the poultry industry struggles to return to profitability. Most companies, the traders say, are expected to be in the red through the month of January. Well, before our feature story this week, we of course have a trivia answer for you. And this week, C is the correct choice. The standard measure of a tree's diameter is taken 4.5 feet above the ground.